My name is Phil Goldfeder. I am the CEO of the American Fintech Council. The American Fintech Council is the largest financial technology and innovative banking trade association based here in the United States. We have grown in only a few years to more than 175 members, continuing to find new ways to help emerging industries continue to grow and to thrive. What we're doing today is the future of financial services. We think about the financial services ecosystem in the US today, and that was built, 100 years ago, 200 years ago. And Mark and Tobias, you could probably give me the whole chapter and verse. And I think for a lot of our members, we're living in a system that was really built a long time ago with obviously iterations over the years. What we're talking about today in the US is really building a new regulatory infrastructure for the next 200 years. And it is really, really exciting for what we get to do with the American Fintech Council. What's even more exciting is what we get to do when we partner with other countries, other organizations to find ways to build mutual collaboration. I say that, question about timing, I think there's no better time to find ways to support the Israel tech ecosystem than right now, and no better person to partner with was Shmuel Ben Tovim from the Israel Fintech Center. I was in Israel a couple of months ago and had the opportunity to sit down and have coffee together and talk about what we're trying to accomplish. And really excited to get this started today. So Shmuel, why don't you kick this off and tell us about you and the organization?
Okay, thank you, Phil, for hosting us. It's really an exciting opportunity. The Israel Fintech Center is actually celebrating next week its bar mitzvah. It's 13 years old, and the concept is putting all the ecosystem of fintech under one roof. So on top of the obvious fintech companies, we have with us financial institutions, consultants, academia, investors, of course. So everyone who has an interest in the fintech industry is part of our group. Our membership is very similar to yours. It's about 170 paying members, and I hope that the potential of the USA will, grow you much faster. But altogether, we have about 6,000 people registered in our database. And what we do is we connect the various parts of the industry together. We run seminars, webinars, conferences, training courses, and also quite a lot of international activities, which is based on MOUs that we have signed during the years with similar organizations around the world. And when Phil was in Israel, I was so amazed that finally we found the right partner in America, because it is so obvious that this is a target market for most Israelis, and we'll be talking about it later on. But so far, we didn't have, a proper counterpart. So we are very happy to launch this relationship with this webinar and many to come. Thank you.
Thank you. And we have to give credit to Uriel at Cross River for making the shidduch and putting us together. And mazel tov to you and your bar mitzvah. Okay, Itai, we're going to start with you. Again, it's funny, I think were my first, when we got to know each other long before you were members, and my first Israeli founder that joined it as a member. And again, for me, there's a personal connection, but more importantly, what you built. I mean, I can't describe what you do better than you, but I mean, you are the leading infrastructure provider for banks looking to create innovation. So Itai, why don't you tell us about you and about what you built?
Thanks, Phil, for inviting me. It's nice to be here. So I'm Itai, I'm co-founder and CEO at Unit, based here in New York. I've been coming back for the same kind of pain for 18 years, building fintech companies. I've never worked for anyone except the companies I started, for better or worse. I started my journey out of, obviously, Israel. I lived there until 12 years ago, moved to Hong Kong, spent 6 years out of Hong Kong, and then ultimately settled here in New York. Unit builds financial infrastructure that makes it easy for software companies to offer different financial services to their customers. Among our customers, we have a lot of Israeli companies like Wix, Honeybook, Agora, Coversea, Sequence, and overall we serve over 100. What those companies tend to do with us is we give them the Legos to build financial services, right? They can select from a menu of primitives of the atoms and kind of cobble together their own experiences. We offer accounts. So companies that want to offer bank accounts can offer them embedded. We offer money movement. So once you have a bank account, you might want to send a check or wire or bank transfer in and out. We offer cards. So you might want to issue debit cards, credit cards, physical, virtual, and we offer credit primitives, which allows companies to extend credit and finance their customers. In terms of scale, we are built on 7 banks that are buying Unit as a core system. And overall, about 100 plus software companies are building on us. We move about 80 billion annually in money movement across all these different kinds of payment types. And we have about 5 million accounts that belong to end users. They could be credit accounts, they could be actual bank accounts, they could be other balances that we can talk about, but that's the scale and state of Unit. About 120 employees between New York and Tel Aviv, mostly, and some remote. And 169 raised from Insight, Excel, and 2 great Israeli funds, Aleph and TLV.
I don't want to play favorites. I'm just saying the Jerusalem and Yerushalayim ecosystem for fintech is growing. So you should consider it, as you consider expansion. I don't want to get Tel Aviv. I don't want to cause too many problems or fights with Yerushalayim and Tel Aviv.
There's too many fights in Israel as is, so don't start another one, Phil.
I'm only kidding. I'm only kidding.
Phil's looking only for fights in America now.
Yeah, exactly. Guy, again, we've gotten to know each other and really just appreciate sort of what you do when it comes to the compliance and the oversight. Again, in the financial services ecosystem, I think what makes this entire webinar special is sort of, we're talking about regulatory challenges and how do you overcome them? How do you think about them? You didn't just think about them, but you actually created and built a company and how to solve some of them.
Yeah, thinking about, compliance as an opportunity. So for introduction, my name is Guy. I'm founder and CEO of Blee, based in New York, originally from Israel. Also left 12 years ago. Should have given Itai a high five at the airport when I moved to the US. Before starting Blee just about 5 years ago, I led marketing operations at Adobe, the Photoshop Illustrator company, but on the B2B side of the business, where I was very close to our CMO and everything related to marketing products. And then in previous life, I'm what some people describe as a recovered lawyer. Spent some time training and practicing before moving to the bright or dark side, depends who you ask. But building Blee was really the sort of understanding that in a world of AI, regulation really becomes an opportunity. And, there's a change of mind that's happening where compliance folks are looking to think how they can become enablers for growth. And in a world where the business is looking to move fast and generate content with AI, and it's across sales materials, marketing collaterals, there's a real opportunity to think how to move content to market. And so Blee is essentially an AI marketing compliance platform that helps some of the largest companies in the world today review content, approve it, and then monitor it when it goes live. We do it today with companies like PayPal, NerdWallet, Rocket Mortgage, Betterment, and many others, helping move about 2 million collateral assets a year. And this number just keeps on growing because with AI, it's a new opportunity every day to create something new. So excited to be here and excited for the conversation.
Thank you. Thank you so much. Okay, Mark, I'm coming to you because next, sort of smarts and looks. Mark, you've been a member of AFC since you were literally a founding member, God knows, even before it was AFC back in 2014. You've been on the forefront. I think we've actually have a good mix of folks in Israel watching today and here in the US. And so we're going to talk about bridging that gap. But why don't you talk about sort of some of the work that you've done over the last sort of many years as it comes to specifically the regulatory challenges in the US and overcoming some of them.
Sure. Thanks, Phil. Happy to be here. I am the practice group leader for the Compliance, Regulatory, and Payments group at Chapman & Cutler, which is a 300-lawyer law firm headquartered in Chicago, but offices in San Francisco, Washington, New York, Charlotte. in all the financial centers. And we have, over the years, done a tremendous amount of work with fintechs, startups, existing platforms, partner banks, and securitizations of marketplace assets. And one of the things that we've done, and I've actually got a copy of it here, is you can see it, our book, which we write every year, The Regulation of Marketplace Lending, which is not only on our website, but I think it's on the AFC website as well, which gives somewhat of a roadmap to some of the legal and regulatory and compliance challenges that firms face. And I think part of the theme that we have is that many of the fintechs that come to us, particularly from foreign jurisdictions, don't always look at compliance at the outset. And that's an important message to send, is that really must be something that happens from the get-go in order to not only get to speed and to scale as fast as you can, but to avoid problems. So I think that'll sort of be part of our message today as we go through the U.S. landscape.
Amazing. Thank you so much. And again, Tobias, who works at Chapman, I would argue, I feel a little bit bad because sort of given who I am and given, sort of the kippah I wear on my head all the time, this should have been a no-brainer, but it was Tobias that kind of drew me in to the first event we did with Gornitsky when we were came into Tel Aviv, and obviously subsequently brought me to Miami last week. And so I really I should credit you for pulling this out and making this happen. So Tobias, sort of talk about some of the work that you do.
Yeah, so I am part of Mark's team. I'm a partner in the team. Mark is my practice group leader. So, I focus mostly on the fintech and banking partnerships, everything kind of fintech regulatory work I focus on. But as Phil mentioned, Phil and I really kind of thought up this idea when we were doing a kickoff in Tel Aviv in February on Miami Israel Tech Week. And we said, there's got to be a way that we could do something together to kind of both help Israeli companies trying to come to the US, but then also do things that would be beneficial to them. So that's really what was the impetus to this webinar, because we both have a strong interest. And for instance, I'm actually part of the Israeli practice of the firm as well. So I go to Israel regularly, and we've done many different things there, both with Garnitsky and also other firms that we partner with over there, but also just part of like Tel Aviv FinTech Week we've spoken at, and I've spoken at various other things. So we're very excited about obviously partnering with companies from Israel that want to come to the US, and we've had a successful track record doing that on my side. But then also we actually have done a bunch of deal work, et cetera, representing bondholders in Israel for U.S. assets and help them buy, massive hotels in like New York City, et cetera. So we have a very robust practice, but I do more of the fintech stuff, and we're just excited to kind of help you guys think about some of the challenges. And then, as Mark mentioned, come to the U.S., but also come in a sustainable way. I mean, I think, that's the biggest thing, is you have a great idea, but we want to make sure that you do it in a regulatory compliant way that gives you some longevity here.
Yeah, I was joking with our panelists before we started. I could probably spend an hour with each of you, just sort of digging deep into sort of, the origin stories. Well, let's just sort of take this broader, and then we'll go a little bit deeper. I guess two things. Number one is what makes sort of the Israel fintech system unique, and sort of how many struggle do you think with thinking about going overseas or cross-border?
Okay. First of all, what makes Israeli fintech unique, I think, has a very broad common denominator with what makes Israel such a tech powerhouse. So many elements are not different, from medical technology or from cyber technology, etc. Just last week, there was a new publication by the pitchbook.com, which publishes every year the top universities that have produced entrepreneurs with new startups. Okay, so the list this year is no different than last year. The top 10 universities are 8 Americans and 2 Israelis. Technion from Haifa and Tel Aviv University. And if you go down the list, you will find another 5 Americans. So it's very, very obvious. Now, of course, the origins of it are not in university, but much earlier. Much of it comes from the military, from the intelligence units, from the culture of having a challenge to meet, the culture of group work, teamwork, which is very, very deep into the blood, I would say, of the Israelis. When it comes to regulation, we complain about the local regulation, but whatever we have here is based mostly on the European network and system. And that has two advantages. First of all, it's easier for Israelis to adapt to the European system. And second, in Europe, it's quite harmonized. So if you've done well in Germany, you will probably do the same in France or in Italy. When it comes to America, most people here are totally confused because first of all, you have the layer of federal, and then each state has its own rules. And I don't know of any Israeli companies trying to do all of it by itself, not only with consultants like the respected people here, but also by finding a local business partner and going to the market together hand in hand with someone who knows the market and the regulation much better. And as you probably know, the holy grail for Israeli companies is to go public in America, to have an IPO, and there are quite a few who have done it. And the last of them is has done it only recently. And I think that the services that AFC can help us with is, first of all, to find the right partners and also the supporting system, because there is no doubt that every Israeli fintech companies looks at America as the ultimate goal. And there are two Israelis or former Israelis here who have gone through the process and maybe can tell more about the hiccups. But I think that Israelis, in most cases, admit that this is not something they can do with their own forces.
All right, so I'm gonna change things up because you laid it. I mean, Shmuel, you gave me the perfect entree. Itai, you're here. Firstly, I have no doubt you're gonna go to the moon and back again, right? Like, talk through how much of and whether it was with Unit or other companies, like sort of when you first started in digging into the ecosystem as a founder and thinking about building is like, obviously you don't have to tell me sort of the founder and sort of what makes Israel so exciting, but what was exciting for you and maybe what did you struggle with and then how'd you get to where you are?
So just two quick references to Shmuel's statements. One is I don't think I will ever think about myself as a former Israeli. I am forever Israeli. And proud, and this is an identity that's very strong and we carry with us even when we live elsewhere. And the second thing is that I actually didn't finish uni or college. My first company started taking off when I was 22 or 23, immediately post army service. I was an engineer. I'm an engineer by background, and so I'm not in that count of U.S. universities, but I think Guy must be. Of Israeli universities. So my journey is actually, I've done the international thing twice. I've moved to Asia to help my previous company expand in Asia, and I've seen taking an established business that had, let's say, 15, 16 million in revenue, 100-ish employees, and helping it expand to a whole new market. Unit was natively born into the US ecosystem. It was, foreign to us to raise money from VCs. It was foreign to us to operate in the US, but more than anything in the US banking system, which is heavily regulated. And I think there's also the layered, as Shmuel said, the layered regulatory architecture in the US that forces you to, pay attention to a lot more details. We have made a very important decision early on to make our second hire a compliance lead. It was basically the result of meeting with banks. I went to, I had a window of 2 months of busy travels before COVID hit in 2020. And I happen to have visited Virginia and Minnesota and a few other states in the process. And in the Minnesota meeting, I meet an amazing compliance leader as part of a bank, and she's asking me later, "Do you guys, what's your next, hiring milestone?" And without any intentions, just to be helpful. And then I said, we want to hire a compliance lead, in addition to an engineer that we will be hiring in Israel. And one thing led to another, and she ended up joining as the person who led compliance at Unit for about 5 years. Um, I think it's really important that you have the right mentors and that you have the right, the respect for the rules. I think that, maybe one thing to say about Israel is like, the kind of moving fast, sometimes at the expense, just culturally, right? Sometimes at the expense of staying on track. And I think it's really important that people approach their US journey very, very differently and be students of the ecosystem and take the right mentorship and only then start to operate. And so I think that's something we paid attention to from the beginning. But culturally speaking, I think that Israelis don't sometimes understand the gravity of staying on track. And also, reputation is very important. You operate, even if the financial ecosystem is very large, one of the largest cuts of the GDP across the US, maybe the first or second. It's a pretty small ecosystem, right? The people on this call all know each other, and we live in this like really dense social network and professional network, and reputation definitely travels.
Mark and Tobias, I know you're chomping at the bit. I want to go to Guy first, but I know there's Itai just gave you a lot there, but Guy, sort of similar to you in terms of, sort of the way in which you came about it.
Yeah, you're muted.
Yep. I think both Ita and I share, the element of compliance is core to our product. And I think that, for companies that are coming to the US, there's always like, okay, how core is compliance to what we do? And if it's not core, you still have the operational aspects of compliance that you have to consider, hiring and immigration and whatnot. But if it is core, then, the stakes are much higher. And I really relate to what Ita said, where, there's the mantra of move fast, break things, but you can't really break trust. Because if you lose trust early on in the process, your recovery is going to be essentially impossible. And so for us, the first hire in the company was in compliance, was in legal, was in getting professionals on board. And the second line of business was how do we build the network and mentorship, as Itai mentioned. It's just critical, especially when you're not coming natively from the ecosystem. And I'm a lawyer and I still don't consider myself, as native, to get the expertise that you need in order to, as quick as possible, be able to prioritize the elements of compliance and trust that you need within your product and within your company, especially early days when you're resource limited, right? Like all startups start with 1, 2, 3 employees. They don't start as, 200 people companies, but they still need to make decisions on the foundation that they're going to have from a compliance standpoint, whether it relates to the product or it relates to the company. And those decisions are so crucial that pivoting down the road is costly and, also is going to take much more time for your company. So taking that time to strategize and think about your roadmap, literally from compliance standpoint, just along your product roadmap, I think is a really important advice for folks starting.
Mark, I don't even have to ask the question. You could take it from here.
Yeah, well, I don't want to hijack it, Phil, but a couple of points that have been made, I think, are crucial to emphasize. One is that, yes, the United States is a complex regulatory structure. We have this dual system of the federal and the state. And of course, we've got 50 states, so that multiplies the complexity of all of this. And depending upon who you are and what you're doing and the products and services that you offer, it's likely that, some federal laws are going to apply to you, some state laws are going to apply to you. And so it really does behoove people to understand this from the get-go. And even I think when startups are looking at their financing, they need to put into the mix that there's going to be some costs for compliance, and that's probably money well spent up front rather than having to re-clear the decks later on and change things when we find out our product or the way that we're offering it may not comply with U.S. law. And in the U.S., certainly there is no one regulator that affects fintech. I can't say I'm a fintech, and so here's the regulator. So if you're in the banking system, there could be banking regulators involved at both the federal and state level, or if there's a security involved, the SEC, or if you're a non-bank, the Federal Trade Commission, or if you're a money transmitter, you have FinCEN and state money transmitter licenses. So there's this intermingling and intermixing of the state and the federal. But at the end of the day, the regulators are going to require compliance. It doesn't matter where you're from the U.S., from Israel, from anywhere. They want you to understand the U.S. laws. They want you to comply with the U.S. laws, particularly important if you're offering, consumer products and services. And it becomes somewhat difficult because regulation does follow innovation. I mean, we've seen products, Phil, you've seen like earned wage access and buy now, pay later, which were set up on one assumption, and pretty soon regulation comes in and changes those assumptions, and everything has to change. And so you always have to be mindful and keeping up to date on all of those things as well. Compliance is certainly something that can be accomplished, but you do have to pay attention to that framework and dealing with it. And we will be the first ones to admit that it's very, very frustrating at some points. I know fintechs want to come in, they want to get their product out there and going, and we ask them, where do you want to start? And they say everywhere. And if you're getting licenses, for instance, which we'll talk about, I think, in a minute, it could be a year in some states before you can get some of those licenses to do what you want to do. So planning compliance up front is crucial. So Tobias, I'll let you fill in.
Yeah, Tobias, before you do, and I think that's kind of the purpose here. I think when Guy and Itai sort of started down their journey, right, it was sort of almost learn as you go, right? There was no playbook, right? And Shmuel, I know this is something that you've thought about, right? How do we create that playbook, and something that we've thought about, but you had to learn it on the fly. Tobias, you're getting those initial inquiries, right? Whether it's via your relationship with Bornitsky or your work on the ground in Israel, you see that directly. So how do you advise and how do you guide?
Yeah, so a couple things. So it's refreshing to hear that Itai and Guy took a different approach, which is, I would say, move fast, break things, but in a compliant manner, right? So that's a great thing to hear, because what I have seen typically from Israeli-based fintechs coming to the US is there's this conflict between what the founders want to do in terms of be compliant because they want longevity, and then there's immense pressure from their investors to go, 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 and just deal with the ramifications later. And there was a time when I was in Israel where I actually was negotiating on behalf of an Israeli fintech, just coincidentally, with two state regulators. And these are very, very tiny states. It was Kansas and South Carolina for licensing activity that they were engaging in unlicensed activities. And for example, they paid $275,000 to the state of Kansas and $75,000 to South Carolina. And I like to use that example to illustrate this point, which is that's a lot of money for two tiny states that don't have a lot of consumers for you. That's not New York. That's not Massachusetts. It's not Texas. It's not Illinois. It's none of those states. So it really does behoove you to spend the time up front to kind of figure out the navigation of where your product's going to fit in that regulatory ecosystem in the US, because then figure out the lane you're going to be in, and good lawyers like Mark and myself can help you decide, like, maybe there's ways to offer your product in a way that, while it's not going to maximize profits from the beginning, you will be more compliant and less likely to get hit with these fines. So like the example that we like to tell people is, let's say you want to be a lender in the fine state of New York where Phil lives. That's fine. You can offer direct product, just stay below certain dollar thresholds and APR thresholds. And then you don't need a license. Now, that's not going to max out your profitability, but because the threshold is like 16% or something. And then, but if you wanted to go above that a little bit, then you get a license. So in the interim, you can still do things while you're waiting. It's just, you have to think about it very strategically from that perspective, but it also helps because I'm sure Itai and Guy will attest to this later. Even though you think you have your compliance down, you don't. And it's just there's gonna be things that you're gonna need to fix. And so that's an easy way to fix it in kind of a low risk way. So I think there is this natural tension, and we see it mostly with all founders and all countries, but we see a heightened tension for Israeli-based founders coming to the US and their investors.
Shmuel, I hate to put you on this spot. I'll tell you all a funny story. If you've been using AI or ChatGPT or Claude or whichever one is your choice, they're very big into the M dashes, right? You can always, it's sort of like it's a given, right? And I told Claude when I started using it that I hate the M dash. And every time I ask it to look at something, it keeps putting it in. And all I have to say is M dash and says, oh yes, that's right, Phil, we forgot. We'll give you an updated draw. And still to this day, whenever I ask it for something, it gives me a draft with an M dash. And so I asked the
Now I'm going to
question.
pepper my emails to you with M dashes, Phil.
I hate them. I absolutely hate them. But what I asked AI was, if I've told you 20 times that I don't like M dashes, isn't that the entire purpose of AI? You should have learned from that. And what it said to me was so fascinating. They said the M dash and the stylistic was so built into the foundation of our code that even though you've told us, we still can't get it out. Okay. I tell you that story because, Shmuel, you heard from Itai and Guy and sort of the culture of Israel and how things work. Even if we do 100 of these webinars, right? Do you think that the message gets across? Do you think that we can actually impact Israeli founders to think maybe a bit differently in terms of how they're going to approach the market? And how can we bridge that gap?
A good question. I think that you've got a good chance for two main reasons. First of all, the Israeli market is very small. So even if an Israeli company is doing, the best they can, it doesn't give a real base for a growth company. Second is, everyone complains about his own regulatory system, and we do the same in Israel, but I can argue that in Israel we do it for a better reason, because our regulatory system is very outdated. And if we go for a minute to basics, every regulator has actually two basic functions. One is to ensure competition and fair trade and protect the consumer. And the other one is to ensure the stability of the financial system. In Israel, the cause of stability is winning time after time. So if the public complains that banks are charging commissions, that are not reasonable, the regulator of the banks will come and say, okay, you may be right, but if we force them to lower the commission, this will risk the stability of the bank. True or not true, this is not the issue. Now, the Israeli system has been built over the years with patch after patch. We have three main regulators with no real, sense who is doing what. Just for illustration, we've done a good advance in payments regulation, but when it came to choosing who is the regulator who will implement it, it's not the two regulators who already deal with payments, the Bank of Israel and the capital market regulator, but they gave it to the Israeli SEC, yes, to the Israel Securities Authority. What does payments has to do with securities? Probably nothing. Most Israeli payment companies are not public. But there is a big but. The Israel Securities Authority is the most efficient and well-run regulator. So if you want a job done, you give it to someone who can do it. So it's very confusing. So I would say that there are many reasons for every Israeli company to look internationally. And the reason for looking at America, if they can make it, is of course, it's a stamp of approval that is acceptable all over the world. If you've done well in America, you're probably worth something. And as I mentioned earlier, at the end of the road, to think about an IPO in America. And of course, if you want to create the right environment to go public in America, it's much better if you do business in America and you have clients in America and you know the market. So I think the motivation is there. And if we can work out together with an AFC, a smoother path to enter the American market, to deal with regulation, to find the right partners, we'll do a great service to both sides.
Tobias, you were laughing. I know it's funny. There was a lot there. It's funny, and the more I think about the Israel sort of fintech ecosystem, I always sort of go back to the regulatory infrastructure. And I always make this argument in the US, and I love my regulators. I have nothing negative to say about our regulators here in the US, especially my current ones. But we always joke about regulators kind of playing catch up with the innovations and the offerings that are being offered. Obviously, coming from Israel, you hope and you always think that maybe someone else has it better and that the regulators there see differently. Based on what Shmuel said, obviously not the case. And so how much of that do you see in terms of someone coming to you and saying, well, I understand the Israel regulatory system. Does that make me more prepared on the US side?
Yeah, I mean, and it's akin to a question that I see a lot. Some of the other countries have regulatory sandboxes where you can kind of operate risk-free. And we see this a lot with international companies, and they say, well, I'm in the regulatory sandbox in South Africa, and I want to bring my company over to the US, so I must be okay, and I don't have to worry about regulation in the US. And I laugh about it because I'm just like, well, I mean, I don't know what to tell you other than the US regulators don't care, right? They just honestly don't care. And Mark and I struggle with this all the time with US regulators. They are completely behind where they need to be in terms of understanding the innovative products that Israeli fintech companies offer, or any fintech companies offer, really. And they want to fit everything into their existing regulatory regime, even though many cases it doesn't. So it's a constant source of frustration, I think, Phil, as you know, for your members and for other countries as well, because they may not be regulated in their home state or their home countries, but when they come to the US, they are highly regulated, or the other way around, they're regulated in a different way. I do know about the Bank of Israel regulating payments. That was interesting to me also to hear that part about the SEC. And so we have kind of similar things here in the US where Mark can attest to this. There was peer-to-peer lending was originally regulated by the SEC through Lending Club, right, Mark? So I mean, it's just a weird thing, and the regulators are very, very behind. They don't have budgets. They don't have kind of the manpower to deal with it. And then on the other side, you see this though, Phil, too, which was amusing to me. A lot of fintechs don't want the lawyers like Mark and me to educate the regulators, because they're like, well, then you're going to give them ideas for putting us into a licensing regime or a disclosure regime that we may not otherwise fit in. And that part we push back on, just candidly, because the regulators aren't stupid, right? They know kind of what's going on, and they actually do appreciate when Mark and I talk to them. Now, we also have to say no, you've gone too far in your analysis of this. So an example of this is a lot of crypto companies are getting regulated by money transmission statutes and regulations. And the pushback that we typically have is, yeah, but crypto's not an official US recognized currency, right? Up until maybe recently, there's maybe an argument with the Genius Act. So how can you regulate it under money transmission? Because there's no money. But when you look at the money transmission statutes, they say something along the lines of something that has monetary value or an equivalent. So that's how they come in. But my point is, it's things like that that definitely, I think you have to get a good partner from a law firm that can help you kind of navigate through that. And look, it's not going to be easy. Sometimes states initially say, oh, your product's not regulated by us. And then as they see their neighboring states start to regulate it, EWA is a good example of that, Phil. they say, oh, well, now we have to regulate that. So
let me, and maybe Guy, I'll start with you. And you both, I think you and both Itai talked about compliance as a competitive advantage, right? You specifically it was sort of one of the earliest things you thought of. Now, there was no pathway to IPO through compliance, meaning the idea of like, oh my gosh, I'm going to spend money on this because that's what's going to make our company successful. Even though that's true, it may be hard to see right out of the gate, right? And Itai, you talked about your first hire, Amanda, who I love, and sort of focusing on compliance, and you found not only did you put the money in, but you found the best, and you built on that. I even hear from fintech companies today. Someone said to me last week, they're a fintech company. They said they would put their compliance team up against any bank compliance team in the country. That's how much they've invested in it. So maybe talk a Guy again, just how did you see that? And I know we don't have a lot of time left, and we're gonna have to do this again, and maybe really dig in a bit more specific. But how did you see that? And then how would you sort of guide other founders to really focus on the regulatory compliance side as they think about that expansion? Guy, we'll start with you.
One thing that I learned from Itai early days is atomic problems, atomic solutions, and really thinking about compliance this way as well, because it's huge, right? There's so many things that you can tackle. And so you have to go from early days and really think about it in terms of, okay, what is the highest stakes and the things that I need to start thinking about right now? Another area of compliance we haven't even talked about here, but like, security, SOC too, and all these things are like, you're selling to enterprise. Like, do you need to start investing in this as part of your architecture? Another area of investment is like, how do I think about reporting? People don't talk about it because you only think about compliance as like, I'm going to pay, lawyers or advisors. But like, how is your platform is doing when it comes to reporting, and is a crucial part of, you being able to work with regulators. So each one of those can represent a problem that you need to eventually think about early days and prioritize, just like other elements of your stack. And so for me, it was even more on steroids because we are with compliance as our core product offering. And so there wasn't like compromises or negotiations, especially when you're looking to work with the largest companies in the world. For other companies, it might be different, and that's why it's a case by case. But that exercise of, okay, day 30, day 90, day 365, what do we need to have in place in order to be able to, move forward and keep building trust with our customers is critical.
Itai, again, there were so many pressures. You're starting a company, you took investments, you have to show a return, you want to kind of get to the pinnacle. And then, but again, I go back and I look at you, and clearly, by the way, you were a leader, right? People were following what you did to think about how they should operate. And I know that to be the case in so many other companies, but what was your guiding light or principle? I know you talked about it a minute before, but so much pressure, and yet you did focus on compliance. How did you sort of shift into that direction, and sort of how did you focus on that?
So I'll just say that I think, VC money and the trajectory that it puts you on, I mean, by expectations, is inherently not conducive to making large investments, right? From the get-go. And it was a very kind of stark reality when we started operating in the US where, I was thinking about raising a 700K seed round when we got started at Unit. I was dragged or, I benefited from a dynamic that led to a 3.6 million round. The legal spend on launching Unit was 700K. Just the legal spend. And I think these types of equations just don't hold in the mind of the average founder. I had been building fintech companies for 13 years before Unit, and yet those proportions don't really hit you. So that's one thing. It's a fixed compliance. Is a combination, of course, of fixed and variable costs, but the fixed costs alone can eat you. And the second thing that happens is, of course, to your point, companies are encouraged to grow fast, and compliance is ultimately a speed bump by design. And it's really hard to balance those two things. I think the only tips I have for people who are trying to navigate those equations is like first, eyes wide open, just like come into the ecosystem knowing what's expected of you and what headwinds and tailwinds you have in the US markets. And then, two things I would say is one, take a 10-year mindset. If you take a 1 or 2 year mindset, you're going to cut corners and you're going to maybe not spend as much as you should on the right things. But if you accept that financial services by definition is a, long game, and if you play an infinite game, and look 10 years ahead, you understand that this is just part of what it means to build a company. So that's one thing. And the second thing is really financial management of the company. Unit has most tech companies, most startup companies operate on a year to a year and a half of runway, sometimes less, and then they're back against the wall, need to raise money. Unit has understood from the get-go that we just can't operate on the time horizons of regular startup companies because we are trusted by banks and we're trusted by end customers. And we always make sure that we have years and years of runway at the expense, by the way, of comfort to the team. Like nobody likes it when I reject and decline positions at Unit, but I've put together a manifesto in 2023. I circulated it with the team. I said it's going to get hard, but like we are doing it to defend the company and give it financial longevity. So I think really managing your runway in a way that accepts slowness in the first 2, 3, 4 years is really important. And Guy and I have different dynamics in our companies. Guy is essentially AI product that plays with marketing assets and doesn't move money, except when you get paid at the end of the month, Guy, which I'm sure is like the happiest money movement. And then Unity is moving money for a living, which is a very different kind of patience to and attention to detail. My point is you have to understand that the game is going to be slower and it's slow by design. And if you slow down enough in the first 3 years and you really think in the 5 to 10 year time frame, you are going to build a large company. And by the way, another thing I will add is that the Israeli employee really likes to think about a quick hit of equity, right? Like, how do I sell the company fast? Like, I look at my friends at Wiz, they sold the company after whatever, 5 years, and they skyrocketed throughout that. You also have to explain it to your employees. Anyone who joins a fintech company needs to join with a mindset of 5, 10 years and beyond. And I tell our team that fintech companies are the only companies that get kind of more attractive and more sexy as they age. 5 through 15 years old is the heyday of fintech companies because they're young enough to be moving fast and established enough to have earned trust and scale. And so I think it's really a constant kind of, steering the airplane, but talking to all the passengers, your investors, your employees, and most importantly, yourself in building that type of mindset and patience.
So Phil, one of the things that Mark and I hear all the time is, compliance is a cost center. It's not a revenue generator. And our counter to that is, well, that's true, but it can also be a revenue saver in the sense that, in my example, you're not paying out these unnecessary fines for what I would call basic mistakes. So I think changing your mindset to understanding that you are going to have to invest the money and looking at it from a long term are helpful.
I mean, we pitch it every day as a revenue generating activity if you do it right. Because if you can allow your business to do 10x more in a way that's compliant, you have enabled the business to, not have blocks in the road. So
let me just say, I love it. Firstly, I think when everybody graduates college, they always say, if only I made $25,000 a year, right? Then you make $25,000 a year. If only I make $100,000 a year, I'm going to be rich. And you make $100,000 a year and you realize very, very quickly, Itai, I love that story. If I only had 700,000, then I'd be great, right? Then we would build our successful company to IPO. Shmuel, again, there's so much to take from this, and we're running out of time, and I guarantee we'll hopefully do more of these. Do you think that, like, again, that advice needs to be heeded? Because I think there is like this idea of like, we want quick payout. We hear about all these successful stories. I mean, we hear about them all the time, but there's hundreds more that you'll never hear about that didn't make it, right? That don't get it. Or, employees who got all those options and all those shares and they just didn't turn into anything. To do it right, as they say, slow and steady wins the race. Shmuel, in terms of, sort of fintech versus not, how do you balance kind of those who spend the time in fintech and the mindset that it takes in the financial services ecosystem, as Guy and Itai mentioned, versus sort of other tech or software ecosystems that you work with, or that you see, I should say?
No. I would say one indicator is the attractiveness of the industry for foreign investors compared with other lines of business. And traditionally, I would say for sure in the last 10 years, you'll see fintech in the second place. First, and of course, foremost is cybersecurity. This is Israel's strength, and that's where most of the success stories go. And also most of the foreign investment, either by private money or, of course, by VCs. And fintech comes second, I would say in the last 2-3 years, even far second. So there is a growing gap between fintech and other cyber. And I'm talking cyber in general because, much of the cyber industry ends up in financial services, but it is still counted as a different. So fintech being number two, and above of traditional technologies that came out of Israel, like healthcare or agriculture or water or defense, which is, of course, the most spoken about in recent months. So there is still money going into the fintech industry, and there are many fintech industry companies that are struggling, also because of the political situation in Israel. So for a startup to get, an angel investor to get it started, it's very tough these days. If they've, raised some money before the crisis and they have some cushions, it's much better. But at the end of the day, the horizon and the aspiration is to go to international markets, to do well in international markets. And as I mentioned before, America comes first. So whatever we can help Israeli companies in earlier stages, and for sure those who are already, grown up and go to round B or C, then America is the target. And whatever we can help, in this collaboration between AFC and the Israel FinTech Center will be much appreciated by the industry here.
Yeah, like I said, we're really just getting started. Let me, thank you, Shmuel, and the Israel FinTech Center for the work that you're doing. I know it's not always easy, right? We hear the news, we see what's going on. It's not always easy to sort of be the face of fintech innovation in Israel, and you have done it in just an amazing fashion. Again, this is just the beginning of our partnership, and let me just tell you something. I hope you can see it and feel it. Like there's a certain pride and energy that I have on this call, compared to any other webinar that I've done or any other event that we've done. I so appreciate sort of the unity and the collaboration and everything that each of you bring to this. Itai at Unit, Guy at Blee, and Mark and Tobias. We are building something really exciting here, and it's our job, right, to help support the next generation of those founders who are going to come and build. And it is why I'm so excited to be here at AFC and working with all of you. With that, again, I hope this is just the first installment of many more to come. I look forward to so many great opportunities, really building the bridge between the US FinTech and Israel FinTech ecosystems, strong for the future and to really grow for all of us. So thank you again, and we look forward to seeing you on the next one.